Interest rates are sitting at 30-year lows. South Africans still remain over-indebted, and the improvements expected in terms of affordability returning to the property market has yet to materialise. Joining me now in studio to give us his views on the industry and whether potential property owners can in fact afford their dream home, Kura Chihota, Executive Director, Leapfrog Properties, joins me now. Thank you so much, Kura, for joining us today. Looking at the overall market in South Africa and just the consumers still under significant pressure, we're looking at debt to income ratios of 78%, relatively elevated. When you go to the bank, they're still expecting a deposit if you're going to buy a home. Is this a scenario that is going to play out in 2011?
It's the economic reality of where we are now, that banks have to require some sort of a deposit to qualify a purchaser coming through. And when they do that, there's actually some relief for the purchaser, because that lowers the amount that they borrow, which makes it more affordable. So it's to get to the end solution where you can lend and somebody can afford to repay, where you have that buyer putting down a deposit.
Time and time again, we keep talking about whether we're going to see the resumption of 100% and even 110% home loans. Do you think that is in the past? And it really all depends on which brackets we're looking at here. So 500,000 Rand home, you still can get a 100% home loan.
Yes, closer to the lower end of the market, there are still those 100% and first-time buyers. Each bank has a specific product out to attract that first-time buyer, and it's a healthy part of bringing new entrants into the market, and because that's where the growth is going to grow. If you look at where house price increases is coming from, you see it's those more affordable homes that have double-digit growth, whereas the general market will perhaps do a single or just match inflation for 2011.
So do you think the scenario is also impacting the fact that house prices are expected to remain relatively flat this year and perhaps even into next year?
Yeah, house prices are the headlines. A lot of people look at that and say, well, if things aren't growing, the property market isn't doing well. What you've got to look at is a supply and demand equation, where you've seen that the supply of new homes coming into the market has been significantly restricted. 47% less house plans passed in 2009 going into 2010. So the supply isn't coming on, but the demand is naturally there. It gets pent up in terms of rentals, where people are not buying immediately, but are holding on and trying to survey when to get back into the market. It's always a good time to be in the market, but rentals are still strong.
Well, it's quite interesting you said that supply is starting to dry up, and that was a very different scenario when we saw the crash happen immediately. So surely if there is more demand than there is supply, then that should ultimately bring up house prices going forward.
The whole thing is around the ability for the developer to raise finance, and that was a very tough proposition going into 2009 and 2010. The developers couldn't get the mother bonds to do the developments, to have significant uptake in the bottom end, or the retail client picking it up. So the energy is now showing itself that people are comfortable, the job losses have stemmed, and people are in the market and looking to acquire property.
30-year low on the interest rate front, and it's said that we will not be seeing another interest rate cut, even though there was a different perception towards the end of last year. We're starting to worry about things like inflation going into 2011, and some even say that we could be factoring in an interest rate hike by the end of this year. Surely the fact that interest rates are relatively subdued and quite low, when you look at the historical levels, then that should have propped up the market even more than what we've seen over the last year or so.
You see the house price inflation in the first half of the year explains a lot of what you've described, that as things became cheaper, as we came on that 650 basis point decrease, people had more appetite to buy. Now we're pretty used to that. The clever economists call it the base effects are gone, and we're now at the level where it's what do I have at the end of the month to be able to purchase a property. Even though the mortgage payments are lower right now, you haven't created an additional stimulus for that guy to have the confidence to go and buy that new home.
Exactly, and then we've got rising energy prices, we've got rising food prices as well. So you've got all these additional costs that you need to think of when purchasing a home.
Yes, so when real incomes start rising, when bonuses started getting paid out in Sandton and the environs, then you've got people who've got a little bit more money, and with that they're happy to splash out on bigger homes, and you get a natural upgrade as people move up the ladder. They leave the cheaper properties behind, and we generate more activity.
Let's look at it from a demographic perspective as well, who is buying homes at this point in time? And it's quite an interesting stat that you've given us. 60% of black property owners live in paid-up homes.
And that is a thick seam for the whole. We can preach the gospel of empowerment, but when you're seeing households, which are the basis of a society, when you're seeing prudent economic activity by the black household, then you've got the base of a real economy. People who own homes and have equity in that property are responsible, self-saving citizens, and that creates the platform where they can have sustainable spending against an asset. If you take a Hernando de Soto model and you say you've got to have active capital, you've got a house with a title deed that you can borrow against, you can leverage that to start a business, to take a child to higher education, and it's the most exciting dynamic we've got in the South African market, that the black buyer is active.
Well, that's quite interesting. I mean, looking at the fact that we're starting to see massive inclusion of the black buyer, as you've alluded to, do you think that we've now gone to normal levels? Would you say so? We're seeing a little bit of a normalization when it comes to homeowners, or do you think there's still a lot of improvement that needs to be made?
No, I think given our history, we still have a long way to go. I think the Lightstone guys put out the stat that just slightly more than 50% of all properties registered in the deeds office are registered to black buyers. So there's still a disparity that 80% of the population still only owns 50% of the property. So we see, and Leapfrog is very well positioned in that space to encourage further black ownership, where you get the natural moving up the property ladder. Guys have a house in the township, they improve that, they improve its value, they sell that, they move to a Mondio or something like that, and you've got this natural train of people going through and getting better properties.
How many homes are registered at the deeds office, just so we can get a perspective?
Approximately 6 million.
6 million.
Yeah.
So in other words, black owners are sitting at around 3.5 million or so.
Yes, and for demand, because their properties are paid up, their affordability is higher than other race groups that are still highly leveraged, because their ability to take on further debt and acquire property is really exciting for somebody who's got capital in this time to pick up the bargains that are in the market.
Well, Kura, I mean, just looking at the property market going forward, and yes, we've got all these other issues that have sprung up, on a global level. We're worried, as I said, about food inflation. We're worried about China tightening. There's still issues coming through from Europe, and of course a lot of debt worries from the US. But South Africa seems to be relatively immune from some of the issues that the world has experienced. We've also got the National Credit Act, which perhaps is hampering some of the robust growth that we saw during the peak periods of 2006 and 2007. Do you think that will be a reality going forward, that we could see very high house prices?
If you look at the trends, you see people after 98, when interest rates spiked, when they came back into the market, the next property boom wasn't as high as it was prior to that. So there's going to be a muting effect that people remember. They've got better memories about how painful it was paying a bond at 25%. Yeah. So the next time around, they're not going to over leverage themselves. But the property boom, if you look at the statistic that South Africa is going to be the 7th largest growing economy by 2050, all of those people are going to need to be housed. If you look at the stat that you have 70% of the population likely to be in urban areas, where they're going to be housed, the properties that are well located near transport or amenity or schools or places of employment will have to rise in value. And I think that's going to be the secondary boom.